full script with markers. Must be 1,500 plus words. The bet, midnight to 0:30. I found 3 ETFs that built more millionaires than any other in 2026. Yes, you heard that right. These aren't just any ETFs. They're the ones that have been quietly turning ordinary investors into millionaires. And today, I'm going to test them and show you exactly what happens. The rules, 0:30 to 1:30. So, let's lay down the rules. First, I'll be using real money, my own money, to invest in these ETFs. No simulations, no hypotheticals. This is the real deal. Second, I'll track every move, every trade, and every result. We'll measure success based on 2 criteria, growth rate and consistency. A high growth rate means your investment grows quickly, while consistency ensures steady progress over time. Finally, I'll compare these ETFs to some popular alternatives to see if they really stand out. Day by day / test by test, 1:30 to 7 o'clock. Let's start with our first ETF, the Vanguard Total Stock Market Index Fund, VTI. This ETF aims to track the performance of the entire U.S. stock market. On day 1, I invested $10,000 into VTI. As the days passed, I monitored its performance closely. The initial growth was promising, but it wasn't until week for that things really started to pick up. The market was on an upward trend, and VTI was riding that wave beautifully. Next up is the Invesco QQQ Trust Series 1, QQQ, which focuses on the NASDAQ 100 index. This ETF is heavily weighted towards technology stocks, making it a bit riskier, but potentially more rewarding. I invested another $10,000 into QQQ. The tech sector had been performing exceptionally well in 2026, and QQQ was no exception. It saw significant gains, especially after a major tech company announced groundbreaking AI advancements. Our third ETF is the iShares Core S&P 500 ETF, IVV, which tracks the S&P 500 index. This ETF offers a balanced approach, covering a wide range of industries. I invested the remaining $10,000 into IVV. The performance was steady and reliable, with consistent growth over time. While it didn't have the explosive gains of QQQ, it provided a solid foundation for my portfolio. The surprising part, 7 to 8 o'clock. Now, here's where it gets interesting. Something unexpected happened during this experiment. Despite the strong performance of these ETFs, there were moments of volatility that could have derailed less experienced investors. For instance, there was a sudden dip in the market due to geopolitical tensions, specifically the Iran war. This caused some panic selling, but those who stayed the course reaped the rewards when the market recovered. Final results, 8 to 9 o'clock. Let's look at the final results. After 6 months of tracking, the numbers speak for themselves. VTI showed a growth rate of 15%, QQQ had an impressive 22%, and IVV came in at a solid 12%. These results are significantly higher than many other investment options. But the real surprise is coming, the consistency of these ETFs. They maintained steady growth throughout the period, even during market fluctuations. Honest verdict, 9 to 10 o'clock. Would I recommend these ETFs? Absolutely. They've proven their worth in 2026, and I believe they'll continue to perform well in the future. If you're looking to build wealth over the long term, these ETFs are a great choice. But remember, this is not financial advice. Always do your own research and consult with a financial advisor before making any investment decisions. If you're enjoying this, hit subscribe. We post stories like this every day, and you don't want to miss the next one. Tomorrow, the Sisters' Revenge 3 months later. Do not miss it.